Industry-specific GAAP standards. GAAP standards evolve based on practical application needs in industries such as industry key guidance/codification topic unique accounting focus construction ASC 606 and ASC 340 long-term contracts, percent completion, revenue timing banking ASC 310, ASC 326, CECL, loan losses, interest income, credit risk, CECL insurance ASC 944 premium revenue, policy liabilities, loss reserves oil and gas ASC 932 full cost versus successful efforts, reserve reporting healthcare ASC 954 net patient revenue, charity care, third-party reimbursements nonprofits ASC 958 donor restrictions, fund accounting, endowments. Construction contracts, ASC 606 and ASC 340. In industries like construction and engineering, long-term contracts span multiple accounting periods, requiring careful revenue recognition. Key principles: revenue recognized over time using percentage of completion method. Use of cost-to-cost method to measure progress. Contract assets and liabilities are disclosed separately. Example: a bridge building firm recognizes 30% of the total project revenue if 30% of total expected costs have been incurred. Failure to appropriately estimate costs can result in material misstatements of revenue and profit. Financial services, banking and CECL, ASC 326. Banks and credit unions must recognize expected credit losses on loans, held-to-maturity securities, and trade receivables. CECL model highlights. Replaces incurred loss model with forward-looking loss estimates. Applies to lifetime expected credit losses from the origination date. Incorporates historical experience, current conditions, and future forecasts. CECL aims to improve transparency in the aftermath of the 2008 financial crisis. Oil and gas accounting, ASC 932. Two primary methods are accepted. 1. Method 2. Description 3. Effect on earnings full cost method capitalize all exploration costs smoother earnings successful efforts capitalize only successful exploration costs more conservative also requires reserve reporting, proved reserves, depletion methods based on production levels extensive disclosures on risks and assumptions. Insurance industry, ASC 944. Insurance accounting involves unearned premium reserves loss and loss adjustment expense, LA, reserves recognition of policyholder liabilities treatment of reinsurance key challenge, actuarial estimates and delayed loss development make precision difficult. Requires disclosure of assumptions and sensitivity analysis. Healthcare, ASC 954. Healthcare providers face unique reporting requirements due to revenue from multiple payers, Medicare, Medicaid, private, charity care and bad debt adjustments third-party cost settlements and reimbursements classification of net patient service revenue and deductions hospitals must disclose significant estimates in valuation of receivables and contractual allowances. Nonprofits, ASC 958. Nonprofits are required to use fund accounting to differentiate between restricted and unrestricted resources. Key GAAP provisions, statement of financial position separates net assets with/without donor restrictions use of natural and functional expense classification required disclosures for endowments grants and contributions liquidity and availability of funds nonprofit financial statements are geared toward donor transparency, not profit maximization. Accounting for derivatives and hedging, ASC 815. In industries exposed to market volatility e.g., airlines, manufacturers, utilities, derivative instruments like options, swaps, and futures are used. GAAP requires recognition of derivatives on the balance sheet at fair value hedge accounting if effectiveness can be demonstrated 3 hedge types, 1. Fair value hedge 2. Cash flow hedge 3. Net investment hedge improper documentation or ineffective hedges must be accounted for as speculative, which impacts income volatility. Fair value measurements, ASC 820. ASC 820 introduces a 3-level hierarchy for determining fair value. Level input type example 1 quoted prices in active markets listed equity securities 2 observable inputs, non-quoted. Bond market yields 3 unobservable inputs valuation models, projections disclosure requirements, valuation techniques use changes in fair value levels sensitivity to changes in assumptions level 3 inputs require high professional judgment and risk disclosures. Specialized disclosures and regulatory oversight. Each industry has tailored reporting obligations. 1. Sector 2. Oversight body. Banking FDIC, OCC, Federal Reserve Insurance NAIC, State Department's Oil and Gas SAC, Reserves, FASB Healthcare CMS, FASB Nonprofits FRCN, Nigeria, IRS, US.